Welcome back to the Cottage Food Operation mini video series. This is episode number 8, the Ocho, Business Licenses and Other Needs. As I mentioned in episode 7, as a CFO, you're going to have to adhere to certain legal requirements. Those requirements are going to be on the federal, state, county, and local level. One of these aspects is called the Employer Identification Number. The Employer Identification Number is issued by the IRS, so it is a federal level number that deals with federal taxes. A sole proprietor with no employees does not need an Employer Identification Number because a Social Security number will suffice. However, if you have employees or are a different form of organization, you will need an EIN. Getting an EIN is actually quite easy. There's a direct website that you can go to and you can apply online. It doesn't take any time and it's free. Another item that we need to address is the seller's permit. The seller's permit is a California permit based on sales tax. A seller's permit allows you to purchase your products tax-free and then, once your product is made, charge your client tax. That tax is collected from your clientele and then remitted or turned into the state of California. Now, food tax is a little bit strange in California and it's not altogether straightforward. There are a lot of innuendos to it. So, a CFO does not necessarily have to charge tax based on their product and its prepackaged nature. However, that is not always the case. It very much depends how you're selling your product, where you're selling your product, and potentially even to whom you're selling your product. If you'd like a more in-depth conversation about that, by all means, utilize my contact information that's at the end of this video. One of the ways your seller's permit can be used is to create what's called a resale certificate. Now, it sounds very official, but there isn't actually an official certificate or form. Essentially, what a resale certificate is it is a documentation between you and one of your vendors who you buy ingredients from that says, here is my permit number, here is my certification saying that I am buying this tax-free, therefore, I can buy it tax-free and then later charge my customers. It is worked out between you and your vendor. It is basically a piece of paper that you give them that they accept, and now you're set up as a reseller, not getting charged tax. In the process of opening up a business, the next thing that we would really want to talk about is your specialty permit. In the case of a CFO, that is going to come from the Department of Environmental Health and is going to be the CFO permit, either Class A or Class B. As a CFO, you are allowed by state and county ordinance to hire an employee, but you would have to check with your city to see if you actually can, based on being a home-based business. If you can and are able to, and then subsequently do hire an employee, you would need to contact the Employment Development Department and get further permitting from them as it pertains to your employees. This step doesn't need to be taken, however, if you are not hiring employees, only if you are. So, once you've got your specialty permit in hand, the standard order of procedure is that you get your specialty permit first. Next, you would get your business license. It always doesn't work that way. Sometimes it's flip-flopped, but for the most part, specialty permit first, then business license. The business license is going to be issued to you from the city in which you live. You're running a business out of your house, inside their city limits, therefore you need a business license. Outside of that, a business license is required for any city where cash changes hands. Having said that, if you're in Riverside and you go to Murrieta to make a sale, you would need a business license there, unless you took payment online or they mailed you a check. But if you go on site to Murrieta and they give you money and you give them product, now technically you need a business license. So Can you get away with it for a little bit? To a certain degree, yes. But if you are going to be doing consistent business or doing special events in that city, you absolutely want a business license in that city. In addition to a business license for your personal home city, you're also going to need probably a specialty permit called a home occupancy permit or a home occupation permit. It gets a little bit wiggy, but a home occupancy permit is for your home in order to allow it to follow certain guidelines to be used as a commercial business. The business license, however, even if it is a home-based business license, is for your business. So home occupancy, home, business license, business. One thing to consider if you are operating outside of your home city is, are you working special events? If you are working special events outside your home city, part of the package in terms of signing up as a vendor at that special event, part of that package might be a temporary business license for that city. That is something that you're definitely going to want to check out because it could save you time and money in terms of getting a business license for that city for that event. So a home occupancy permit is for your home business. So what it is a way for the city to restrict what exactly is going on and turning a residentially zoned home into at least a partial use commercial enterprise. As such, they are going to have certain restrictions. Number one, and as I mentioned in an earlier video, is can you do this at your home? Did you get the proper clearance from your landlord, your homeowner, your HOA, your property manager as to whether or not you can do this? This home occupancy permit is where that sign off and that clearance is going to be addressed. Other concerns with a home occupancy permit is, can you do it? Can you have employees? Can you do signage? Can you make alterations to your house? Noise ordinances, foot traffic, parking, all of these are oftentimes items that come up as it pertains to HOP restrictions. So while state and county rules might say that you are allowed employees as a CFO, one, your HOP more than likely is where that might be challenged. In this case, the city has the final say on whether or not you can have employees, and if your HOP says that you cannot, then you cannot. So there are ways to address your total square footage use. There are ways to avoid the trap of going over your limitations, but it is something that very often is on and attached to an HOP. And it's a simple reason. They don't want you to turn your entire home into a commercial enterprise by saying that you're using 100% of the square footage for a commercial purpose. If that were the case, your house might as well be zoned commercial rather than residential. And if that's the case, now you're exceeding what it was meant to be, and it's just a no-go. Next item that you might want to look into is optional. It is not required. However, if you're getting involved in events, it is almost required. What it is insurance. There are many different forms of insurance, but an industry standard, at least for caterers, artisans, CFOs, temporary food facilities, or working at a commercial kitchen, is to have a $1 million general liability policy. Now, that sounds like a heck of a lot, but I assure you it is not as expensive as all that. You can find a $1 million general liability policy for as little as $500 a year or $40 a month, or in some cases, there are other alternatives out there that could cost even less. Some of those alternatives I have seen as little as $299 for a year. As a CFO, general liability insurance is probably your strongest bet. However, there are other items that you might want to address. Should you adjust your homeowner's insurance to address the fact that you're running a small but commercial enterprise from your home? So just in case you burn the house down while you're flambeing something or baking something, or there's a short in your oven, you don't want your homeowner's insurance to say no to your claim because you didn't supplement your homeowner's insurance. Now, additionally, the same thing could be said of your car. If you're using your car for deliveries and drop-offs and stuff like that, and you get in an accident and your product is all over the street, the insurance adjuster sees that and says, what is with all these packages of cookies everywhere? Oh, well, I was delivering my CFO products. You're now using your vehicle in a commercial capacity, and worst case scenario is they don't actually pay off your claim, in which case now you have a broken car and a ton of money lost in product, which brings up the next item. Product insurance, product liability insurance. What happens if you get T-boned and your product is all over the street? That is lost product. What happens if a pipe breaks in your bathroom above your kitchen or where you store your finished product and floods that area and your product is destroyed? Any number of circumstances or cases can be done for any of these type scenarios, but ultimately, product liability insurance would protect your product. So as I said, insurance is not required. If you're going to be doing events, more than likely they will require you to have an insurance policy in order to sign up for that event. So at least general liability is something that you probably want to get. The other ones obviously are optional and up to you. And as a CFO, obviously you want to keep your costs down. So do your best judgment, take a look at it, make your determination, but go out and get quotes and then make a decision as to whether or not it is something for you. Thanks for watching along. My name is Jay Allis. You can contact me through my email address, which is jallis, JALLIS, @iesmallbusiness.com. You can call our office at 951-781-2345 and ask for me, Jay Allis, and I will be able to help you not just with the CFO, but any other food industry needs you might have. In addition, you can go to our website at OCIESmallbusiness.org. OCIESmallbusiness.org. Thank you.